Ever wonder what goes on in the mind of a top trader? You know, the kind. Someone who pulls in millions, makes it look easy. And maybe, just maybe, they hold the secret to unlocking that trading success we all dream of.
Oh, absolutely. Like what makes them tick, how they make decisions.
Well, you've come to the right place because today we're diving deep into the world of Kane trades.
This guy is the #1 paid out trader in a major prop firm's history. Did you know that?
Wait, seriously, like how much are we talking?
We're talking a cool $1.86 million in a single payout.
Yeah, and his total earnings are even more impressive.
Okay, hold on. So over $2 million from the firm and nearly $3 million overall in his trading career, right?
You got it.
So spill the beans. What's the secret sauce?
Well, get this. Kane's story isn't some overnight success thing.
Oh, really?
He started in Forex,
Interesting.
then dabbled in that crypto roller coaster,
Oh, yeah, I remember those days.
even took a massive $700,000 hit when FTX crashed,
Ouch. That's gonna hurt.
before finally he found his groove in futures trading. So that FTX loss, that's got to be a good place to start.
Yeah, it's a testament to his resilience.
You think so?
I do. He didn't just throw in the towel, right?
No, of course not.
He used that experience to refine his approach.
That's interesting. What do you mean by that?
Well, he saw firsthand the importance of a well-regulated market.
Okay, and that's what drew him to futures.
Right.
Okay, so he lands in futures, and what does he focus on?
The NASDAQ.
Not the Dow,
Nope.
not the S&P 500.
No, sir, but the NASDAQ.
Why is that?
There's a method to his madness. He uses the S&P for confirmation, like a guiding star, but it's the volatility of the NASDAQ that really gets him going.
So he sees volatility as an opportunity.
Exactly. A chance to get in and out of trades quickly,
Yeah.
capitalize on those rapid price swings.
Now, you might think this means he's glued to his screen 244/7,
You would think so, right?
but
Wrong.
really.
He's all about maximizing efficiency, which means being laser-focused on specific trading windows.
Yeah, we're talking about.
The London session
Okay.
and the New York morning session.
Makes sense.
But here's the kicker.
Oh,
He skips Mondays and Fridays for London trading.
why is that?
He found that the sweet spot is, well, Tuesday, Wednesday, and Thursday.
In the London session.
Yep, and focusing on reversals or continuations when the New York market opens.
I see. And he's not about racking up a ton of trades either, is he?
No way, his magic number.
Let me guess.
1 to 3 trades per day, max.
Wow, that's it.
2 losses, he's out. 2 wins, he's done. Discipline is the name of the game.
Remember, earlier you mentioned wanting to avoid information overload.
I did, yeah.
Well, Kane gets it. He's all about simplifying things,
Oh, for sure.
focusing on what really matters.
That's the key.
That's why he primarily uses the 15-minute chart
What he and the interviewer call the sweet spot.
for making trading decisions.
Yep.
So it's about finding that balance,
You got it.
having enough information to understand the price action,
Right.
without getting lost in the minutia of every single tick.
Exactly.
Now, he doesn't completely ignore the bigger picture, does he?
No, he doesn't.
Tell me more.
He also looks at hourly and 4-hour closes,
Okay.
with a particular emphasis on what he calls the 10 a.m. macro time.
Interesting. So he actually claims that's his most profitable trade,
He does.
focusing on the close of that hourly candle at 10 a.m. Eastern.
That's the one.
Okay, let's talk risk management, because that's something you were really curious about earlier.
It is, yeah.
Kane has a pretty unconventional approach.
He does, doesn't he?
He uses a fixed contract size,
Mm-hmm.
regardless of volatility.
Now, this might seem counterintuitive.
Yes, a little bit.
When volatility is high, your risk goes up.
Right.
But remember, so does your potential reward.
So how does he balance this?
He de-risks entirely when the VIX gets too high.
The VIX.
Yeah, that's the volatility index, also known as the fear index.
Right, of course.
Think of it as a gauge of market uncertainty.
Okay, so the higher the VIX,
The more volatile the market,
and
the more cautious Kane becomes.
I see. So fixed contract sizing keeps things simple,
It does.
but demands a lot of trust in his strategy.
Exactly. And that fixed sizing actually forces him to be more disciplined with his stop losses.
Interesting.
He's not constantly adjusting his position size, so
So,
he has to be more precise with his exits.
okay, so how tight are we talking?
Typically 25 points or 100 ticks, but when things get wild, he'll widen it to 50 points max.
And if the volatility is so crazy that a 50-point stop loss isn't feasible?
He doesn't even touch the trade.
Wow.
It's about recognizing when to step back and preserve capital.
This all points to a very calculated and disciplined approach.
It does, yeah.
But let's talk about the elephant in the room.
Oh, which one's that?
FOMO, the fear of missing out. Even the best traders feel it, right?
Yeah.
How does Kane deal with it?
Oh, yeah, he's not immune to FOMO.
So how do you overcome it?
He's learned to overcome it. And some of those lessons learned the hard way through expensive mistakes.
Ah, yes, the market tuition we all pay at some point.
His antidote to FOMO is simple, sticking to his model.
Okay.
He's back-tested it rigorously,
Yeah.
trusts it implicitly,
Yeah.
and knows that deviating from it more likely to lead to losses than wins. Remember, you mentioned wanting to work less,
I did.
not being glued to the charts all day.
Definitely trading to live, not living to trade, right?
Exactly. And his model helps him achieve that.
How so?
He can quickly assess a chart and know if it fits his criteria. If it doesn't, he moves on.
That's amazing.
No wasted energy, no unnecessary stress.
That's powerful. Knowing when to walk away is just as crucial as knowing when to enter a trade.
I'd say so.
Okay, so we've covered his trading journey, his risk management, his approach to FOMO.
Mm-hmm.
What else can we glean from Kane's approach?
Well, his journaling practice is incredibly insightful.
In what way?
He actually keeps 2 journals, one for trading, one for personal reflection.
2 journals. Okay, I'm intrigued. Tell me more.
In his trading journal, he focuses only on his bad trades.
Only the bad ones.
Yep.
Well, not the good ones, too.
He finds more value in understanding why he breaks his rules.
I see. So was it lack of sleep, an emotional day, market conditions he didn't properly account for?
Maybe. By analyzing those losing trades, he can identify patterns and triggers that lead to poor decisions.
You mentioned you were interested in tools for self-improvement, right? Well, this is it. By understanding those triggers, he can work on mitigating them in the future.
That's the idea.
Now, what about his personal journal? What's that all about?
That's all about the bigger picture.
Okay.
At the start of each month, he takes time to reflect on the previous month, both personally and professionally. He sets goals, outlines aspirations, and even writes a letter to his future self.
It's almost like a tangible way to track progress.
Yeah, and hold himself accountable.
And at the beginning of each new month,
He reads the letter from the previous month to see how far he's come
I love that.
and refocus his energy on what's important.
This journaling practice is something we can all learn from. It's
Absolute.
about taking the time to step back, reflect, and course correct.
Right.
Okay, so we've covered a lot of ground here. What are some of the most valuable lessons we can take away from Kane's approach, both in trading and in life?
First and foremost, discipline. He has clearly defined rules, a well-tested model, and the mental fortitude to stick to them.
He's not letting FOMO dictate his decisions.
No, he's not.
He's not letting emotions cloud his judgment.
Nope.
And he's not afraid to embrace volatility, within reason, of course.
He understands that volatility creates opportunity.
But he doesn't chase every opportunity. He waits for those that fit his model
Exactly.
and that mindset. Trading to work less, focusing on what matters, tuning out the noise, that's applicable to so much more than just trading.
You're absolutely right.
And that journaling practice, that dedication to self-reflection and continuous improvement.
That's a game changer no matter what your goals are.
So as we wrap up this part of our deep dive into the mind of Kane Trades, I want to leave you with something to think about. Kane's approach is all about focusing on what matters most and tuning out the noise. What are your biggest distractions when it comes to learning or achieving your goals? What would it look like for you to adopt a more Kane-like focus in your own life?
We'll continue this deep dive in just a bit, but take a moment to really ponder that. What can you learn from Kane's journey? And how can you apply those lessons to your own life? You know, it's fascinating how Kane's story really underscores that whole idea that setbacks can be incredible catalysts for growth.
Oh, yeah.
Remember, he didn't just stumble into success.
Seriously?
He took a pretty significant hit.
He did with that $700,000 loss when FTX went under.
Exactly.
Yeah, that's not just a minor setback. It's a life-altering event for most people.
It is.
I'm guessing that experience forced him to do some serious soul-searching. Did he ever think about throwing in the towel on trading altogether?
He actually admitted in the interview that quitting crossed his mind.
Really?
He described going through these cycles of winning and losing.
Hmm.
And after that FTX crash, he felt like he was back at square one.
Wow.
Except, of course, with a giant hole in his portfolio.
That's got to be a brutal realization.
Oh, yeah.
It really highlights the importance of having a solid financial foundation outside of trading.
It does.
You don't want to be in a position where one bad trade or even a market event outside your control can completely derail your life.
Couldn't agree more. It's a crucial lesson for anyone.
Yeah.
Whether you're a seasoned trader or just starting out,
Right.
having a plan B, a safety net, is essential.
Okay, so back to Kane. What was it that ultimately reignited his passion for trading?
Yeah.
Why didn't he just walk away?
I'm guessing it wasn't just about the money at that point.
You're right. I think it was about the knowledge and skills he'd acquired,
Mm-hmm.
even through those painful losses.
Yeah.
He developed this deep understanding of the market, honed his analytical skills, and refined his ability to read price action.
That's right.
And he realized those were assets he could carry with him, even if his account balance took a hit.
It's like that saying, fall 7 times, stand up 8.
It is.
He knew he had to dust himself off and get back in the game.
Exactly. And that resilience, that's something we can all apply to any area of our lives.
For sure.
Setbacks are inevitable, but it's our response to those challenges that truly defines us.
I agree. So Kane gets back in the saddle but decides to shift gears.
He does.
He moves away from Forex and crypto
Yeah.
and jumps into futures trading.
So why the change?
Well, we touched on this earlier, but he was drawn to the highly regulated nature of the futures market.
Yeah.
After the Wild West of crypto, he was looking for something more stable, more transparent.
Interesting, though, he actually started in Forex before venturing into crypto.
He did, yeah.
What made him move away from Forex initially?
He felt that Forex was too easily manipulated
Oh, rough.
from a broker and spread perspective.
Okay.
He didn't feel like he was competing on a level playing field.
Right. So it's like playing a game where the rules are constantly changing.
Yeah.
And someone else is holding all the cards.
Exactly.
So he goes from Forex to crypto, takes a big hit, and then circles back to a more regulated market with futures.
Right.
It seems like his journey has brought him full circle, but now he's armed with a wealth of experience, hard-won lessons.
It's not the straight line to success, is it?
No, it's not.
There are twists and turns, and sometimes you have to go through those ups and downs
Yeah.
to really find your path.
So we've talked about Kane's trading journey, his risk management techniques, how he deals with FOMO,
Uh-huh.
and his insightful journaling practice. Is there anything else we should explore before we move on?
There's one more gem from Kane that I think will resonate with our listeners.
Oh, yeah. What's that?
He emphasizes the importance of finding a trading style that aligns with your personality and lifestyle.
Oh, right. Remember how we talked about him only taking a few trades per day
Yeah.
and how he's not glued to his screens constantly?
Exactly.
It really goes against that image of the stereotypical day trader
Yeah.
who's frantically watching every tick of the market.
Exactly. And that's because Kane has consciously designed a trading approach
Yeah.
that fits his personality and his life.
Yep.
He calls it trading to work less,
I like that.
not living to trade.
That's such a refreshing perspective. It's a reminder that trading shouldn't feel like a burden
No.
or a constant source of stress. It should be a way to achieve your financial goals while still enjoying your life outside of the markets.
Absolutely. And before you even start thinking about strategies or risk management, you need to ask yourself what kind of trading style fits your personality and lifestyle. Do you thrive on fast-paced action, or do you prefer a more laid-back approach?
It's like trying to fit a square peg into a round hole. If your trading style doesn't match who you are, it's just not going to work.
That's the mistake many new traders make.
Yeah.
They get caught up in the excitement of a certain style without considering if it's sustainable for them in the long run.
So what questions should someone ask themselves when trying to determine their ideal trading style?
Well, time commitment is a big one.
Right.
How much time can you realistically dedicate to trading each day?
Makes sense.
If you have a demanding job or a busy family life, day trading might not be the best fit.
Right.
You'll want something that allows you to make decisions and manage your trades without being tethered to your computer all day.
Definitely.
Another important factor is risk tolerance.
Oh, yeah.
Are you comfortable with potentially large swings in your account balance?
Right.
Or do you prefer a more conservative approach?
Yeah, and risk tolerance isn't just about the amount of money you're willing to lose.
Right.
It's also about how those potential losses will affect you emotionally. Some people can handle big swings without batting an eye,
Yeah.
while others find it incredibly stressful.
And lastly, consider your personality.
Yeah, okay.
Are you patient and disciplined,
Right.
or are you more impulsive and prone to emotional decision-making?
Okay.
Your inherent traits will play a big role in your trading success.
It's about finding that sweet spot,
Yeah.
a trading style that complements your strengths and mitigates your weaknesses.
It's like finding a well-tailored suit.
I like that.
It should fit you perfectly and make you feel confident and comfortable.
So we've learned a lot from Kane today, haven't we?
We have.
We've explored his risk management strategies, his
Wow.
approach to FOMO, his journaling practice,
Mm-hmm.
and even how he aligns his trading style with his personality and lifestyle.
His story really highlights the power of perseverance, self-awareness,
Yeah.
and the constant pursuit of growth.
He didn't let a major setback define him.
Mm.
He used it as fuel to come back stronger, more focused.
Yeah.
His journey is a reminder that the path to success isn't always linear. There will be bumps along the way,
For sure.
but it's how we navigate those challenges that ultimately determines our outcome.
Absolutely. And I think that's a message that resonates far beyond the realm of trading.
Oh, totally.
It's relevant to any pursuit in life, whether you're building a business, learning a new skill,
Yeah.
or simply trying to be a better version of yourself.
We'll continue exploring Kane's world in just a bit, but before we do, I want to pose a question to you. Think about the challenges you've faced in your own life.
Yeah.
How have you overcome them?
Mm.
What lessons have you learned along the way that have shaped your approach to learning, to achieving your goals,
Right.
to navigating the inevitable ups and downs of life?
We'll be right back to wrap up this deep dive into the mind of Kane Trades.
All right, so we were talking about how Kane favors the NASDAQ Q for its volatility, but he's not just jumping into any trade, is he?
Oh, no. He's got a system, a model
Right.
that guides his decision-making. And one of the most important elements of that model, his focus on specific time frames.
Yeah, we touched on this a little bit before.
Yeah, he primarily uses the 15-minute chart, for making those split-second trading decisions.
Yeah.
But he also keeps an eye on the hourly and 4-hour closes.
And this ties back perfectly to, remember earlier, wanting to learn efficiently and avoid information overload.
Yeah.
By focusing on these specific time frames, Kane's essentially filtering out the noise.
Exactly. He's not getting bogged down in every single tick of the market.
Right. It's like he's found a way to streamline his analysis
Yeah.
and really hone in on the signals that matter most to him.
And remember, he even called that 10:00 a.m. macro time his most profitable trade.
He did, yeah.
The close of that hourly candle at 10:00 a.m. Eastern. That's a pretty powerful statement.
It is. It definitely makes you think about how we approach our own analysis, right?
Right.
Maybe we're overcomplicating things by trying to absorb every bit of data. Sometimes less is more.
Exactly. By narrowing your focus, you can actually gain a deeper understanding of the market and make more informed decisions.
It's about finding that sweet spot between having enough information to make a sound judgment and not getting bogged down in the minutia.
Right.
So much of Kane's success, I think, comes down to that discipline, being able to tune out the distractions,
Yeah.
focus on what truly matters. He's not just trading the markets, he's trading his life,
Sure.
making calculated decisions that align with his goals and values.
It's a reminder that we all have the power to create our own success
Yeah.
by defining what's important to us and then building a strategy that supports that vision.
So as we wrap up this deep dive into the mind of Kane Trades, I want to bring it back to you, the listener.
Yeah.
We asked you earlier to think about the challenges you've faced and the lessons you've learned. What have those experiences taught you about yourself?
About perseverance.
About the importance of having a clear vision and a solid plan?
What insights have you gained that can help you navigate the path towards achieving your goals?
And those goals, whether those are related to trading or your career or simply living a more fulfilling life. Kane's story, I think, is a powerful reminder that success isn't about luck or overnight wins.
Oh.
It's about discipline, resilience, and that relentless pursuit of growth. It's about learning from our mistakes, adapting to new challenges, and never losing sight of what we want to achieve.
And remember, the journey is just as important as the destination.
Oh, it is.
Embrace the process, celebrate the small wins, and never stop learning.
If you want to learn more from Kane directly, head over to his Twitter and YouTube channel, Trader Kane. We'll be back next time with another deep dive into a fascinating topic. Until then, happy learning.